The Bitcoin ETF, it's now widely expected to get the green light this week. Two sources close to the process now telling me it's looking like Wednesday, which is also the deadline for Cathie Wood's ARK and 21 shares bid. Then I'm told potential trading would happen Thursday or Friday, but it has been a moving target here on dates. The SEC is expected to approve a handful of applications at once. Those sponsors filing even more paperwork this morning, where we are starting to get a sense of this price war emerging. There are 13 applications out there.
So with the spot Bitcoin ETF applications and their final steps towards approval, they're all filing their amended S1 forms right now. And it's a fee war. It's a price war going on. BlackRock's fees will be at 0.3% and 0.2% in the first 12 months or until $5 billion in volume is hit. ARK fees are at 0.25%, Galaxy fees 0.59, WisdomTree at 0.5, VanEck 0.25, Valkyrie 0.8, Fidelity 0.39. So all of these fees are much lower than expected. And Lark Davis posted this on Twitter saying, why? Because all of these applicants are fighting to get the first customers, right? Market share. That's what all these companies want. And we've been talking about this for years, where these big companies, they bash crypto, like Jamie Dimon, Chase, JP Morgan, the banks, and then you have other companies out there, Visa, MasterCard, they didn't necessarily bash it, but they were just standoffish. And then they dive in full-fledged because they want the market share and they want revenue to come over to their companies. And so they're likely expecting a big demand right away, and they want to make their product as appealing as possible. So wave of capital will flow into Bitcoin, most likely starting this week. And so Bitcoin, you guys woke up this morning, it was pretty nasty over the past week. People were concerned, thinking Bitcoin was going to drop to 32K. The altcoin market was bleeding out. You could see over the past week, like Solana down 9%, dropping below $100. XRP dipped down to, like 50, 55 cents. It was down 7%. Cardano down 12%. Avalanche down 12%. So still on the week. Polygon Matic down 16%. But over the past 24 hours, this is some good news coming to the markets. But I do want to issue a warning, and I'm going to share with you guys what's happening on the charts, comparing gold to Bitcoin and what happened when the gold ETF was approved. But Bitcoin broke above $47,000. So we have some key indicators to look at, on the RSI, the Pi cycle bottom, Pi cycle top, liquidation heat maps, and some other big news to show you guys in the markets. Plus XRP. Where is XRP going to go next that you need to be ready for? So if you're feeling blessed, if you're feeling bullish for the crypto market, comment 777. And if you're going to be the first millionaire in your family tree and you're ready to buy grandma's house back with XRP, take your putter, grab the like button, tap it in, sink the putt, give it a tippity taparoo, because we're doing it for grandma, we're beating the SEC, and we're buying our house back with XRP. Let's run it. All right, bull runners, welcome back to the channel. So investor.gov, the SEC's website, they're saying, say no go to FOMO. So they're telling you, at some point we felt FOMO, whether it involves trying to get a reservation at a trendiest new restaurant or hottest ticket at Broadway. Everyone has experienced some kind of fear of missing out. And so they're putting this out there right at the time that the ETFs could potentially be getting approved. So are they signaling that, hey, they're going to approve them, and they are trying to warn people from FOMOing in right now? Why would they post this right now for FOMO if they didn't know that something was about to happen? And so if we look back, let's compare this to when gold, right? Because Bitcoin's being compared to digital gold. Then let's compare to XRP and the rest of the altcoin market as well too, on how this will affect the whole entire industry in the altcoin market cap. Because the gold spot ETF was approved in 2004, this is what it did to the price, but it didn't happen right away. Sure, when you zoom out, you're like, oh, ETF gets approved, price goes to the moon, right? We go camping on the beach as the moon, but that's not what happened. In fact, I drew it up and I traced up exactly what happened when the gold ETF was approved in November 18th of 2004. Right after the approval, for about 18 days, a little over 2 weeks, the price of gold rallied. It rallied up 4%. And then it crashed, and it consolidated for over 287 days. It crashed 10%. So what was happening here? Well, it's what's happened with Bitcoin. So we just need to look at this objectively and not get all hyped up here and get all sauced up and, you need to put your pants back on. I know it's getting exciting with Bitcoin passing 47K, but at some point, this rally will cool off. Now, the real question is, how much higher will Bitcoin go with this ETF approval, and how much longer after the ETFs get approved will it rally? Well, that's a good question. We're going to cover that with these indicators and show you guys what's happening. But the key here is the rumors that were bought up for the gold ETF drove the price of gold from $372 upwards of $440 before the ETF approval. And then right after the ETF was approved, it was priced in other than an additional 4%. And then it took 287 days of consolidation. Then gold breached back above $470 right here, consolidated for another 56 days, and then took off. And on the way up, we saw massive price volatility, where we saw these rallies followed by these crashes of 9-10%. This rally upwards of $729 for gold, and then it crashed down 25%. Now in the crypto market, that's like a 50 or 60% crash, and then the markets just continued upwards. But you see massive corrections on the way up. And so we're going to see this happen in the crypto market, with Bitcoin. So if, in my opinion, if you're just holding long term, you're going to be fine. There's nothing to worry about. But if you really need the money and you're like overly investing more than you can afford to lose in the markets right now, and you can't afford a 20 or 30% dip in the markets, then you don't want to be FOMOing in right now, because the same people that were getting in the market, that were looking at the markets down here when Bitcoin is 15, 16K, even right here in October, and they're like, not really interested. The markets are going to turn around. They're going to crash. It's going to go to 12K. It's going to go down. Now, those same people are more than likely going to be looking at the markets when Bitcoin hits, if Bitcoin hits 48,000, 4950K, they'll be looking at Bitcoin up here, and it'll be looking like the, that white swan, that girl that wasn't that good looking in junior high. Now she's looking pretty good looking after college, right? They're going to be looking at Bitcoin right up here. They're going to be buying up here, and then the likelihood of a correction and a crash for Bitcoin coming at this stage is a lot higher for Bitcoin to see a sell-off going into the halving, after the ETFs get approved. Why? Why is that likely? Rather than me just guessing here. Well, this is what happened with gold. Also, when we look at Bitcoin to the US dollar price chart on the daily, what we can see here on the price chart on the top of the screen that I'm moving right here, and then on the bottom of the screen is the relative strength index. And so we can see higher highs being formed on the price chart, and we just put in a higher high for not only 2023, but for 2024. Whereas on the RSI, we see these lower highs forming. Now we did just break out on the RSI. We're sitting at 66. So we just broke this descending resistance, and we're actually forming a higher high on the RSI than the previous lower high that we formed back here on the 2nd of January. So I'll explain this in a little bit. But the real key that we look for is if the price chart is making higher highs and the RSI, the relative strength index, is making lower highs, it means a reversal is more than likely coming. Now we need to zoom out to see if we can confirm this on the 3-day candles, on the weekly, and on the monthly candles. So let's look at the 3-day right here, because as you can see where I'm looking at on the chart, you see this high right here, the RSI was upwards of 84. And so we saw this high take place, and the RSI saw a sell-off. Bitcoin dropped down to 34K. Then we rallied up for this high right here. So we're seeing a higher high. I'll just put HH, a higher high on the price chart. And then if we look down on the RSI, we're also seeing a higher high on the RSI. So that's actually good news that the trend is bullish, right? Because we want to see a higher high on the price chart, a higher high on the RSI. So the trend is your friend. We're in a bull trend, right? It's when we see a lower high on the RSI, but simultaneously we see a higher high on the price chart that we don't necessarily need to worry, but we need to be aware of what could come next. And so because we are seeing right now currently a higher high on the price chart, and we could be forming a lower high on the RSI, what I'm personally looking for is when this will get rejected, and then we'll form a downward trending resistance right here that we need to watch on the 3-day. And so if we get rejected, we're all the way up here, guys, at 73 on the RSI. And so if we can't top where we were up here, 86, that's pretty high on the RSI. If we don't go upwards of 87, 90. If we go upwards of 90, then I think that would be the high of at the beginning of 2024, and we'll be coming down after that. So my thesis is still the same. I'm bullish right now, but I'm about to be bearish here soon, okay? I'm about to be bearish here soon. And looking at this, let's compare back to 2019 as well too on the weekly. So what happened here? Well, on the price chart, we saw Bitcoin rally from the low back in January of 2019 from $3,000 upwards of $9,200. We saw the RSI come upwards of 79, nearly 80 right here, and then crash 18%. And then the RSI dipped down, came down to 65, and then bounced one more time for a higher high on the price chart, but we saw a lower high on the RSI. So because we saw a higher high on the price chart, lower high on the RSI, and then Bitcoin saw another sell-off from this wick down 34%. We broke structure. We broke this upward trending support right here. So we broke it, We came back to retest it as resistance right here. And then the bears took over and the momentum shifted, right? The momentum for the bulls was done. Lower high on the price chart, RSI declining. Now the price starts declining on the other side. Now, very interesting. Okay, I'm not saying that this is going to happen because just because, you know, we're seeing a lower high in the RSI and a higher high in the price chart doesn't mean that, you know, if the price cools off for a little bit, comes down on the RSI, the price comes down, doesn't mean we can shoot up. We can't shoot up further. We definitely could, right? Because as you guys can see, you know, back here with the price coming down 18%, we saw one final blow off top for that 2019 rally, and the RSI came all the way almost back up to 80. You know, it was like 78, off about 2 points. So on the right-hand side of the screen on the weekly, this is where we are right now. The RSI was all the way up here when Bitcoin rallied up to 44, almost 45K in the beginning of December, the end of 2023. Now, right now, what I'm looking for is a potential lower high to be in on the RSI while we top out on the price chart right here, upwards of $48,500. Now, interestingly enough, this would be, we're pretty much already there, depending on where you're measuring, a 618 retracement on the Fibonacci retracement tool. So on the left-hand side of the screen where I'm circling, a 618 retracement is roughly right around where we are right now, if we're measuring from the pi cycle top to the pi cycle bottom. Because as you guys know, the pi cycle top and bottom indicator has been pretty accurate the past few cycles, where it got the bottom to the exact T back in December of 2018. It got the top to the exact T back in December of 2017. For the previous bull run, it got the bottom almost to the exact T. We could see this wick here in the 17th of August was a little bit lower than this, but pretty great entry point, right? If you just follow the pi cycle bottom indicator, and then it got the top pretty accurate as well for the last few bull runs. For this bull run, it actually got the top accurate based on the RSI, somewhat based on the RSI, where you guys can see the RSI right here in January of 2021 peaked out at like 94, 95, and Bitcoin's price was at 42,000. We saw a sell-off, then we saw a higher high in the price chart, lower high on the RSI, and then we saw this downtrend take place on the RSI, is downward trending resistance, while we were simultaneously forming a higher high for the all-time high. So if we measure from the true high, which was April of 2021 versus the all-time high, to the pi cycle bottom, we are right at a 618 retracement. And as you guys know, during the last few bull runs, if I were to measure from the pi cycle top to the pi cycle bottom, as you can see, we did a 618 retracement right here for June 2019's high when Bitcoin reached $13,000. Now, let's do the same thing for the last bull run and let's see what happened here. And I've talked about this in previous videos, but the reason why I'm bringing this up again is the warning for you guys, because we saw Bitcoin rally up to exactly a 618 retracement right here, and then see a sell-off going into the halving and a consolidation for 189 days. So we saw a sell-off of almost 30% right there. And then we saw the 2019 sell-off that was even more drastic of 70%. So anywhere between 30 and 70% is possible. It's possible, right? You have to look at that objectively. You can't be like, no, that's impossible. The ETFs, it's impossible. The ETFs are going to pump the markets to the moon. It's impossible. You can't say that. You got to look at like what's probable, not if it's impossible. It's definitely possible for Bitcoin to come back down to 30,000, 32,000. It's definitely possible. It's actually more probable for something like that to happen, because if we've done a 618 retracement the past few bull runs, if we're seeing a bearish deviation on indicators on the MACD, the RSI, and on the daily, the 3-day, the weekly, if we see that stuff start to line up, well, then you got to be very smart and practical here. You can't let your thesis change. You can't let your FOMO kick in. You know, you can't let your greed take over, because going to coinmarketcap.com, you can see we're 67 out of 100 on greed. We're still in greed right now. And so when do you buy? Let's go back to basic trading crypto logic here. Buy low, sell high. Buy when there's blood in the streets, buy when there's fear, sell when there's greed. Where are we? We're in greed, right? So is it the best time to buy? No. Is it the worst? In the macro, no, but in the micro, yeah, it's not the best, right? So we're at 618 right here if we measure from the pi cycle top to the pi cycle bottom. Now, if we were to measure to the true all-time high, to the true bottom of Bitcoin based on just the price chart, not on this pi cycle bottom indicator, where would a 618 retracement be? Well, we're almost there. It'd be about $48,000-ish, 48,500 maybe. So we could peak all the way up here, and simultaneously on the RSI, we see the RSI coming up. We have an 83 right here for the first peak of Bitcoin early December. And we're seeing this RSI come up, and it's not currently above the previous peak. So we see a higher high in the price chart. We could be seeing a lower high on the RSI. And if we get rejected from the 618 and we come down, we could potentially be seeing a head and shoulders pattern form, where you see the left shoulder right here in April of 2023 when Bitcoin rallied up of $30,000. We saw the RSI come down to 45. We see the head all the way up here on beginning of December for that rally of 45K. And then if we top out here for a higher high in the price chart and a lower high in the RSI, and we see the RSI come down, and then we see the sell the news event shortly on or after the ETFs, or if the ETFs get delayed, guys, they still haven't been approved yet. Sure, there's good news circulating out there, and that's why the price is rallying right now. But let's just say if the ETFs get delayed and we see Bitcoin's price come down and consolidate, and we see the RSI drop down to 50, I would expect there to be another bounce, and then for a trend reversal to take place for Bitcoin to come down, leading into Bitcoin's halving to come down to 35, 38K in the short term. Maybe we see a bounce back up to, 42K right here. And then we see another drop back down to 30, 32K. This is what I would expect to take place. Again, like I always say, I hope I'm wrong, right? I hope that Bitcoin goes up 48K, consolidates right here, maybe sees a 5%, 10% correction, then shoots up to 57K, consolidates, and then shoots all the way up past the all-time high. I hope this happens, right? And I hope that I'm wrong, but the RSI was already upwards of 83. Maybe we come up higher, upwards of 90 for one final peak up here, and then we see a reversal, but eventually we can't stay above 70 forever. Now, shorts piled in, expecting to sell the news event. Short liquidations, occurred around $44,500 to $45,200 range. As you guys can see right here, this was posted by Capital15C on Twitter, where you can see massive amounts of leverage in yellow, right around 44 to 45K. So the price tends to move to liquidate where those traders are. So as you guys can see, the price moved right through that, liquidated all of those shorts, and their stop losses were hit above 46K. And as you can see to the upside, there's not much leverage to the upside. So where does price tend to move? Where the most amount of leverage is. Now you guys can see where is the majority of leverage. It's all the way down here, $41,500 to $44,000 per Bitcoin. And so I expect there to be massive amounts of manipulation, on and after the ETFs. If there's delay, then I would expect the price to crash down to 40K relatively quick. And so I'm macro bullish, but micro very, very cautious right now, because understand this, there's probably not a single day in Bitcoin's history where there's been a net flow of more than 1.5 billion long on Bitcoin, and the ETFs are about to get a mandate to buy roughly 3.5 billion in the space of 5 days, with the bulk of it coming in day one. So no one is ready right now for what's about to happen. We might shoot up to 48, 50K relatively quick, but eventually that hype will cool off for a little bit, right? We've been bullish since December of 2022. And for the altcoin market, we've really been bullish since October. So there's periods, and these are usually a few months worth of rallying and then a few months worth of bearish price action. And in the months worth of rallying, we see days and a week of consolidation. And so as you guys can see here, we saw this sell off to back test the previous range that was resistance as support for confirmation. And now we're rebounding off of it. But also we can see a divergence happening on the RSI, where we're seeing higher highs happen on the price chart for total 2, which is the crypto total market cap excluding Bitcoin, and we're seeing simultaneously lower highs on the RSI. So if we trend higher into the ETFs and Bitcoin rallies up and that goes into altcoins, and we see the altcoins push up to this upward trending resistance right here, I would expect the RSI to push up to this descending resistance right here. And if we see a sell-off coming at that upper echelon of this upward trending resistance on the price chart, and we were to see a sell-off of this downward trending resistance right here, we would see lower highs on the RSI, higher highs on the price chart, which means that the momentum is shifting. Now, if I were to pull up Bitcoin for you guys and show you what happened to Bitcoin during the 2021 bull market rally before we went into a bear market right here, we saw the same thing happen on Bitcoin's price chart compared to the RSI, where we saw the RSI peak up upwards of 88, almost 90 right here. Bitcoin's price rallied all the way upwards of $41,000 plus. we saw a sell-off in Bitcoin of about, if we were to measure the percentage, of about 31%. People thought it was over, but the bull run still had some juice left in it before the bears took over. But you guys can see this momentum shift. And so we saw the RSI come down right below 50, bounce, and then we saw a lower high. I'll just put LH right here so you can see what I'm looking at on the RSI, the relative strength index. And we were seeing a higher high right here for Bitcoin on the price chart. So if I were to just put HH with my sloppy handwriting right here. Now, what happened there? Well, when we are going up, we're not just doing a straight line. You're kind of zigzagging on the way up, forming higher highs and lower highs. But we're seeing higher highs on the price chart, but we're seeing lower highs, and we're seeing, relatively flat support right here. And so the momentum was starting to shift because there were lower highs on the RSI, another LH, but we're seeing a higher high on the price chart and a higher high, but the highs aren't like significantly above the previous high. They're starting to slow down. You see it kind of roll around right here. We saw a break of structure. The markets fall, come up to back test the upward trending support, and then we fell off a shelf right here while we were simultaneously making lower highs on the RSI, just continuously trending downwards. And then the chart kind of caught up with the RSI, where then we were making lower highs on the price chart, lower lows, and we were making lower highs and lower lows. So the RSI lined up with the price chart because the momentum shifted. Think of it like you're driving. Okay, so the best way I can explain this is think of it like you're driving a car on the freeway at 60 miles an hour and your foot is on the gas. That's what's happening all through this period right here. Then there hits a period where you realize you missed the exit and you're like, oh shoot, well either I can catch the next exit or I can just push the car in reverse and slam on the gas even harder, because then you're going in reverse. You'll blow the transmission doing that, but it's a quick way to slow down the car, while you're going at 60 miles an hour. You'll destroy the car, and that's what destroyed the crypto market. So what happened here is there was a period where once we saw a higher high on the price chart, but we saw a lower high on the RSI, that's when the reverse was kicked in and they started slamming on the gas to reverse the car from going 60 miles an hour from 0 to 60, meaning we went from $10,000 upwards of $58,000 really fast, really fast. So 500% in 137 days. After cooling off for over 500 days doing virtually nothing, then we just blasted up really fast. So we formed a higher high on the price chart, lower high in the RSI. And as you guys know, multiple points of contact strengthens the signal, whether it's a reversal or whatever you're looking for specifically. So we saw one point of contact right here where we saw a higher high price chart, lower high in RSI. Then we saw another point, then another point, and then another point of contact. And so these multiple points of contact were signaling that, this rally was over and we had to see a correction take place and a sell-off. And that's where we saw 55% for Bitcoin. But then Bitcoin decided to form a dead cat bounce. And one thing that was interesting was the true all-time high for Bitcoin was a higher high on the price chart than the previous high. But on the RSI, as you can see right here, it was a lower high than the high back here in January of 2021. So how is it that we went all the way upwards of 89 on the RSI when Bitcoin was at $41,000, but we only made it back to 78 when Bitcoin went up to $68,000? Momentum shift. Momentum shifting from the bulls to the bears. And so right now, what are we looking at? Similar to 2019, similar pattern forming, right? We're seeing higher highs on the price chart, but we're seeing lower highs on the RSI. And so the RSI was all the way upwards of 86 back here. This isn't just for a few days, guys. This is since October. This is all the way back October, November, December, January, almost 4 months once we get to the end of January. So we're about 3 months and a few days here and there. But we've been forming higher highs. We're just forming a higher high right now. And we've been forming lower highs on the RSI. And so err on the side of caution right now. Now, how does this affect the rest of the market? Well, hey, if Bitcoin's seen a sell-off, sure, we could see that money flow into altcoins temporarily, but eventually the altcoins catch up with Bitcoin on the macro trend. And so if Bitcoin just continues to sell down, altcoins continue to sell down. If Bitcoin continues to trend up, Bitcoin may go first, then Bitcoin's dominance peaks out. So what we can do is we can look at Bitcoin dominance. And I know a lot of people ask, what tool am I using? This is TradingView. If you guys want to create your free TradingView account, you can use the link in the description below, and you'll be able to create a free account. There is a paid version. I use the paid version because you can put multiple charts up, have different indicators and all that good stuff, and you can take it more seriously. But when we look here at Bitcoin's dominance, which shows the total percentage of the market cap that Bitcoin holds, and we go on the weekly, as we look at this descending resistance right here on Bitcoin's price chart. And so leading into the ETF approvals, I expect Bitcoin to push a little bit higher. I'm expecting $48,500. So I expect Bitcoin to push upwards to this descending resistance right here and then see a rejection from it, and for Bitcoin to sell off along with the altcoin market cap. This is what I'm expecting. So when Bitcoin's dominance starts to drop, it doesn't mean that the altcoin dominance is going to rise. What it could mean is stablecoin dominance starts to rise, right? And so as you guys see here, the RSI has been trending bullish on Bitcoin's dominance. Bitcoin has been trending bullish if I remove one of these RSIs. So Bitcoin has been trending bullish. So we could push back above 70 on the RSI, but eventually we're going to see a reversal happen. Now, if I were to go to USDT market dominance, which is Tether's market dominance, the largest stablecoin, what we're seeing right here for Tether is we've been seeing Tether's dominance drop while Bitcoin's dominance has been rallying. Now, eventually Tether's dominance will bottom out, and we'll see a period where it could be months, it could be weeks, it could be days where Tether sees a rally in terms of dominance and comes back up, because we're all the way down here on the RSI. We're sitting at 33. So if Bitcoin's dominance with the ETFs, or like gold, 18 days or a week or 2 weeks or however long after ETF approvals starts to price into the markets, and then all of a sudden that hype starts to die off, then the narrative becomes, what's next? Like, what's the next thing? Oh, it's Bitcoin's halving. What happens leading into Bitcoin's halving? A sell-off. So then people start selling off. Well, then what would happen with Tether's dominance? So we can see this upward trending support right here, and then we also see this descending resistance for a symmetrical triangle. So because Bitcoin started to rally, Tether's dominance broke the support, and it's been seeing a sell-off. Now, eventually we're going to bottom out down here somewhere on or below 30, and then eventually we'll see a reversal. And so if I were to draw a descending resistance on the RSI right here, that would bring Tether's dominance, or the RSI, back upwards of maybe 48 or 50 in the short term, leading into Bitcoin's halving, before we then see Tether drop another time. So in the short term right now, Tether could push a little bit lower, meaning Bitcoin would push a little bit higher, Bitcoin's dominance would rise, Tether's dominance would see a sell-off a little bit further. We could come back down to this zone right here, as support, which we're almost at right here. This was resistance back in September 2020, June of 2021, February 2022 for Tether. So I would expect USDT's dominance to come back down within this range and then see a bounce out of here. And however high we go, that will be into Bitcoin's halving, just like we've seen a sell-off every single halving for the last few bull runs for Bitcoin, and then we come back down. And now simultaneously, we need to look at the DXY. And so if we go on all, you can type in DXY. It's the US dollar currency index, which measures the dollar in terms of the strength relative to a basket of other currencies. Well, what we're looking at on the dollar is the dollar has been seeing a sell-off since Bitcoin's rally back in October. And so down here, we're at this descending resistance right here. And so if the dollar continues pushed higher, then Bitcoin's rally would flip around and go bearish. But if we see Bitcoin push higher, Tether drop, I would expect the dollar to drop as people move money out of the dollar and they start dumping it into Bitcoin, and then the dollar to drop all the way down to 100. But eventually I would expect another bounce for the dollar going into March, April, May, somewhere around here, and something like this to take place for the dollar along with Tether's dominance. And so as you guys know, the dollar moves inversely to crypto. So when crypto is bullish, the dollar is generally bearish, and that's why the chart looks like this. And when the dollar is bullish, crypto is bearish. And so there's periods where it has an ebb and a flow, where there's periods where the dollar is more bullish than crypto, or crypto is more bullish than the dollar. And recently, since October, crypto has been more bullish than the dollar. Well, as you guys know, it can only go down for so long before we see a correction, before we see, retracement or a bounce in the DXY. And so I would expect there to be a bounce here soon. Now, whether it comes right now or whether it comes 2 weeks after the halving, not the halving, the ETF approvals, or a week after, or a month after. I don't know, but it's coming nonetheless. And so XRP needs to see a holding weekly close above 0.5636 according to Crypto Insights on Twitter. What is XRP at right now? Well, it's at 58 cents. XRP's seen a rally with Bitcoin happening. And there's a lot going on in the crypto space right now. You know, the potential Bitcoin ETF this week has everyone focused on Bitcoin. So the consensus of crypto Twitter is that on the launch of a Bitcoin ETF, the attention will then move, you know, after that to Ethereum, as a speculation of a spot Ethereum ETF has been floating around. However, you know, he feels that there could be a great timing right now for XRP to make its move. Now, this might happen with Ethereum and alts for sure. You know, there's a few reasons he feels this. Firstly, as we can see below, XRP is currently holding above and arguably the most pivotal level in regards to price, which is 56 cents. In the last 7 years, XRP has reacted to this level multiple times, both as support and as resistance. XRP is displaying similar technical characteristics to the 2021 bear market. 2 tests of the 56 cents range as resistance, a breakthrough on the 3rd test, and then a consolidation. Now in 2021, the next phase was a breakout. Secondly, we have capitulation within the XRP community. People are throwing crap at each other, emotions are flying high, and people, you know, are selling because they can't take it anymore. It's too stressful holding this project. XRP hasn't done nothing. It doesn't move. And so this tells him on a sentiment level, we're close. Remember, we buy fear, not greed. And so if everyone's fearful, everyone's getting out, that means the closer we are. If the vast majority of people are pissed off and they're like, this is a crap project, I'm getting out, awesome. That's the best possible scenario, because that's why 99% of people are losers. They suck. They're broke. 99% of people lose money, not because they're bad people, right? They're hardworking Americans. You know, they work consistent jobs, but they're just ignorant about how the markets move. It's like me. I'm ignorant when it comes to like fixing a toilet or being a plumber. I'm not a plumber. You know, if I was going to do open heart surgery, I'm ignorant about open heart surgery. That doesn't mean I'm an idiot. I'm just ignorant about that subject, right? I'm smart about other things, but I'm an idiot with other things. So the vast majority of people are idiots about these markets, and this is how you get wealthy. You look at what the vast majority of people are thinking, feeling, and doing, and if the consensus are saying one thing, you do the freaking opposite, okay? So if the consensus of people is absolutely bullish, we're all jumping in right now, do the exact opposite. No financial advice, don't buy, don't sell anything we talk about on our channel, but common sense would suggest that common sense isn't so common, okay? So common sense would suggest the smartest thing to do is the opposite of what the masses do. And if everyone's getting in, you get out, okay? If everyone's getting out, you get in. Really, really simple. Now, you know, a wait on XRP has been for nearly 3 years. Ripple versus the SEC. They still have to go to court unless we see a settlement sooner, but the asset itself is not a security by law on the secondary market for trading. Now, this narrative will have flushed many holders out as people look to sell on the release of that news, you know, at the 90 cent range to kind of break even if they bought 90 cent, because they can't take holding this asset and they can't be patient. Finally, this isn't the catalyst, but the tight consolidation structure is like a coiled spring that's ready to pop off for XRP. In fact, on a technical level, the rising consolidation is more of a bullish structure than that of 2017. And we know what happened next. And no, not suggesting that we see a 60,000% move like in 2017, although history suggests that it's possible. It does take more market cap, more money to move XRP now that it's over $30 billion market cap, whereas back in 2017, it just took a few $1 billion. So, you know, breakout for a Bitcoin ETF would be explosive for XRP, you know, because XRP, the last bull cycle has to catch up to the previous one in 2017, since it didn't pass the previous high, whereas Bitcoin went from 20K all the way upwards of 65K. XRP didn't do that. So could the attention move to XRP? You know, what could that narrative be leading into the halving? Bitcoin's halving, lawsuit being finished, potential ETF, Ripple IPOing, massive liquidity flowing in from institutions. And so the sentiment right now is pretty dark for XRP. Hasn't been doing anything, but you know what they say, the longer the base, the higher in space. And so what has the base been for XRP? Well, this upward trending support since June of 2022. And arguably, we can draw this all the way back out, guys, to March of 2020. Look at this. Look at this support. It's upward trending support. It's a long time. It's been a long period of patience right here. I mean, it's been 1,400 days. And so if we look back in 2017, you know, if you bought all the way up here, how long did it take before XRP broke out? You know, it started about 1,200 days. Yeah, 1,200. So we're an extra 200 days beyond that if you bought all the way down here at the low. Now, if you bought at the high of 2021, we're at about 1,000 days. So could it take another 1,200 days? Anything's possible. We could coil up even more. I mean, we could just trade along this upward trending support for who knows how long. XRP could just do this, right? It could do this until middle of 2024. Lawsuit gets clarity, they pay the fees, boom, then XRP springs. But eventually, XRP is going to do something, you know. So for people to say they don't have it in their portfolio, I think is ignorant. And together, you know what we're doing? We're backing up our truck all the way to the bank. We're grabbing the bags, packing them, stacking them, leaving no bags left behind, because we believe the spending power of the dollar is just going to continue to go down in value, even if there's a bounce in the DXY in the short term and crypto sees a sell-off. Well, what does that give you guys? It gives you a better opportunity to back up the truck for the dip. I mean, imagine if you bought the dip back here when Bitcoin was crashing from $10,000 to $4,000. Even if you bought Bitcoin right here at $8,000 and then you held, you know, you held through the entire bear market, what would you be up at right now? If you bought at $9,185, you'd be up 4x on your income. So if you put in 100 grand, you'd be at $500,000 on that from 2020. So for 4 years, you know, to make 300, 400K, that's not bad, a six-figure income to tuck away a small percentage of your income into the crypto market. So where's the best risk to reward ratio right now? Well, it's an XRP, guys, because the lawsuit is going to be finished here soon. I mean, this has been 3 years of pain, frustration, people getting pissed off at each other, keyboard warriors throwing nonsense in the comments on Twitter, on YouTube, on Instagram, posts about XRP. And so the more hate that there is about XRP, the better. So what I do is I look at comments and I'm like, okay, are people optimistic or overly positive about XRP? A correction, a sell-off's probably coming. If everyone's really negative, XRP is about ready to break out. That's the way that I see it. So look at what the masses do the opposite. And so discover our top altcoin picks first, get early bird access to our financial education platform when that's released. Virtually nobody is doing this. 99% of people don't do this. So you want to be a part of the 1% by going to bullrunners.com, clicking the button on the page, putting your best email address. It's free to do it. You get instant access to our Telegram group to get this information first, because by the time these videos are recorded, researched, edited, uploaded, distributed by the algorithm, it's too late. So you want to see this information fast. You want to see it quick, and by going to bullrunners.com. So I'll see you guys on the next video. I will see you on the beaches of the moon and on bullrunners.com. As always, you know what to do. Stay bullish.